Morning, Brian. How you doing this week?
Hey, Bill, good. I'm doing well, thanks. Have a good weekend.
Yeah, wasn't too bad. I'm trying to celebrate Cinco de Mayo today, but have to get out of work early for
Aren't we all? If I hear
it.
May the 4th be with you one more time, I think I'm going to lose my mind. It's some pretty or you shared some pretty solid insight in our last discussion on what's the issues inside of the medical insurance industry right now and why rates are going up. And we'll place a link to that video here in this one.
Since our last discussion too, I kind of came across a few questions with a few clients dealing with hacks and um, uh, locking their systems up, and they want to know what the cost could be. Is it worthwhile coverage and all this other stuff? So I was going to ask you about that on the next time we got together. So, um, cybersecurity. Uh, what do you think about it?
It's a coverage that 95% of companies have, whether they have a straight up cyber liability policy or there's a small endorsement on a policy that they have. It's pretty commonplace now, right? When you hear the term quote unquote business insurance, well, there's no technical coverage called business insurance. There's a lot of different coverages that businesses should acquire to cover different risks, and cyber liability is one of those that protects against data breaches, ransomware attacks, cybercrime for companies that are operating in industries such as healthcare, such as law firms, such as accounting firms, financial planners that hold a significant amount of data. They have that and build appropriate limits of coverage as such.
Yeah, the coverage that comes with a lot of their business owners' policies, their canned policies, doesn't seem to be much in there for the cyber, though. Usually they're limited to like $50,000 worth of coverage. And I have a knowledge of an accounting firm that got not only hit once, but twice with a similar scam where one of their accountants was involved in sending wires to a fictitious account. They didn't know it was fictitious. It seems like someone jumped into the middle of their conversations with his banker via email and changed routing information to him, making it look like it came from the bank he was dealing with. And they lost hundreds of thousands of dollars on that. So these coverages that come with the policies don't seem to be nearly what you need. Is that correct?
Correct. Yeah, that's exactly correct. Yeah. So what you're referencing in that situation is a line item of coverage called social engineering, where there's a third party who intrudes on a discussion, typically via email, because the party that the money is being sent to, their email is being monitored. They catch it. They send an email right away coming from that individual's email or makes it look like it. They change the account number within inside of the bank, and the individual wiring the money says, "Oh, he must have just put a wrong number inside of the account number that's there, so I'll wire it to this one." Wrong. What happens is that money is now gone, and they've got to turn to coverage that is inside of a true cyber liability policy, not just an endorsement on a small business owner's policy or a commercial package policy. They got to turn to the cyber liability policy for social engineering coverage that's on it there. And the big takeaway from it, though, is look, know who you're sending money to, right? I mean, I call it the human firewall. Pick up the phone, call the individual on the other end, confirm the account number and the routing number before hitting send on that transfer, because once it's gone, it's gone. Yeah, are there recourses
Right.
potentially from the bank or wherever? Sure, but do a 5-minute due diligence call or less with the person you're sending money to and confirm those numbers. It'll save a lot of time, headache, and hassle in the long run for sure.
Right. One of the first things that I do on just about every email that I get, especially with instructions on something that I need to do, I hover over the person's where it's coming from, and typically on something like that, although it may say in there that it's coming from, let's say, your boss, their name, but when you hover over it, it shows where the email is actually coming from, and it's coming from Timbuktu.com. You're like, okay, this is a scam.
Yes,
Um,
Exactly. Yeah, exactly. So yeah, that's part of a solid risk management process, but it's also got to be communicated to employees, right? You can't just have a process and do nothing with it. You've got to have a process that's communicated to your staff. When you
Hmm.
communicate it to your staff and practice it on a regular basis, it hopefully drives home the awareness that, hey, I need to be more diligent when I'm sending money or clicking on an email that I think is coming, that looks suspicious or feels suspicious, but I know it's really coming from the president of our company. No, it's you've got to do your diligence in that as part of your policies and procedures and controls that you have in place.
Do the carriers that you use for these, specific cyber policies, not the ones that come built into our coverages, but specific cyber policies, those separate coverages, do they help the customers set up their standard operating procedures? And like with our company, on a monthly basis, we have this 15-minute webinar that we go through that just gives us some of the things to look out for. And then we take a quick little quiz, and then we move on with our day. But it puts it in the back of our mind, hey, don't trust everything that comes over the internet to you, or even calls that they're scamming people's voices now and making calls that are all AI generated. So it keeps
Yeah.
it in the back of our mind. Do the carriers help with that, or help you set up your standard operating procedures to protect yourself?
Yeah, great question, and they can, but not all carriers are created equal, right? Some of them do have risk management teams where they will give certain consulting tips and consulting privileges to policyholders that are there and walk through that and help them understand what do those procedures and policies look like for your specific industry, because what is prudent for healthcare is different for manufacturing and is different for wholesale trade and is different for financial services. Most carriers have the ability to do that, but companies like ours, though, we've got a good risk management team as well that helps with that as well. Our cyber division, cyber unit has professionals that are there that can help set up controls, policies, and procedures, so they're not just left out in the cold to understand what's going on. And with that knowledge, inside of not only our industry, of our office or our company, but carriers as well, you can put a pretty solid risk management plan in place when it comes to handling cybersecurity. And you referenced a good point about artificial intelligence, right? So the growth of artificial intelligence in the cybersecurity space is significantly enhancing, and it continues to enhance it has over the course of the last year, 18 months, 2 years, where cybersecurity professionals, or if there's a chief technology officer or a chief information security officer, or even if you're outsourcing those services through to another party, if your company is not big enough to have a cybersecurity team internally and you're outsourcing it to your cyber risk supply chain, well, AI has really helped transform risk management when it comes to cybersecurity. So lean on professionals who understand that, but also be aware that cyber criminals are also leveraging artificial intelligence in order to conflict or in order to do serious harm to companies that they're targeting and going after. And that's just
Hmm.
not from system damage, but that's anywhere from, as you referenced earlier, sending money through to others, where you're seeing deep fake videos that are now put forth, where it's an individual in accounting who believes that their CFO just gave them instructions via a video message, and it's not the CFO. The CFO the video was made to look like it was the CFO. So artificial intelligence is being used by cyber criminals on a very frequent basis in order to do harm. And carriers and companies need to try and stay a step ahead of that in order to put in those policies, procedures, and controls as those AI enhancements and cyber risk continue to evolve.
Well, helping a customer set up their procedures to help defend themselves against these attacks, making sure that they have a custom cybersecurity policy that meets their needs, or maybe their general policy is enough for their need. Maybe they don't have an exposure to cyber in some of these companies. So it's all customized. What do these policies cost? How do they figure the rates on these? What are some of the things that cause a policy to increase in cost or set a smaller premium depending on what the risks are?
Buyers right now are in a position of strength when it comes to cyber liability policies and cyber liability coverage, meaning the market is soft, right? We've exited the hard market where costs were up and coverages were reduced or coverages were limited. We've exited that and are in a soft market right now where buyers are in a position of strength, especially if they have implemented policies, procedures, and controls, some of which include implementing multi-factor authentication and endpoint detection and response. If they've implemented that and also have layered cybersecurity controls, we're seeing decreases in overall costs right now of 20% plus, and coverages being enhanced and added back on. To answer your original question relative to what does price look like? Well, for starters, you look at some of the underlying questions when we do a simple intake form to get an idea on a price indication for a company. You're going to look at A, industry, and B, the types of records that are being held. So are we looking at just personally identifiable information, name, address, birth date, potentially social security number, et cetera? Or are we also looking at health information and medical records in addition to the other items that are there? Are we looking at banking information that's on it? So the higher the risk that's involved in it, just like anything else, there's likely a higher cost associated with coverage. But if we look at just to use some specific examples in terms of cost, so this client is in healthcare, specifically home care and home healthcare, a lot of patient records. Employee records as well. That's another part there's employee records. How many employees do you have? They're doing about $4.5 million a year in annual revenue. And we were able to show and achieve a cost per $1 million of coverage at just over $2,500. Larger entities, from there, it's the higher the risk, the more records one has, et cetera. Now your costs are going to elevate from there. So if we jump into middle market space, that's there. We start to look at let's look at an inpatient mental health facility, for example. They're going to have anywhere from 30 to 60 beds. That's going to be patients in there at one time. Tens of thousands of prior patients and patient records that are in there, and specific controls that are in place. And they're going to be doing upwards of 15 to $17 million a year in revenue, depending on number of beds and that they have. They're going to be more than double the cost of the one that I mentioned. So large market, if we look at companies that are generating, and I'll say large market, it varies by whatever revenue threshold one wants to use or number of employees. But let's say it's a company generating $100 million a year in revenue. They have upwards of 200 employees. And I'll use healthcare as it's my area of specialty. Well, we're seeing the cost of cyber in that space, especially if it's has higher risk involved in terms of what they've, what they're doing with the numbers of patient records, number of employees they have, and their controls that are in place. About $10,000 per $1 million of coverage, but that's down from where it was in the last, say, 6 to 12 months. As again, buyers are in a position of strength right now, especially those that have the correct policies, controls, and procedures in place.
One last question on that, as you were talking about these limits, is a cyber policy something that can be put underneath a company's umbrella too, or no, is it excluded from that coverage?
Yeah. Good question. Yeah, it's excluded. Cyber risk is on its own, and you buy separate layers of coverage on cyber liability that's on it. So $1 million, $2 million, $3 million, 5, 10, 20, what's there. And a good way of understanding, of how much a company should have an acquired purchase and purchase, we can put together a benchmarking report that shows your specific industry benchmarked against your peer group that's in there of relative size and relative employee count. We can use a clearinghouse benchmarking report that shows what are the limits that your peer group is carrying, what are their costs that they've reported through, what is the cost per $1 million of coverage, and you're going to see your percentile rank. So if you're an industry where your peer group is carrying $3 million of coverage based upon your revenue size and employee count, but you're sitting at $1 million, and everyone else or the majority are at a higher limit, you're probably underinsured based upon the risk inside of your industry, because part of that benchmark report is going to show what have claims looked like in the last 24 or more months that have led to significant policy payouts from that. And it could be the flip side too. You may be overinsured. You may be thinking that, hey, I need $10 million because I'm scared. I don't want to have a very large cyber risk, but it might not be prudent in your industry to have that high of a limit. Potentially, it could show that you're overinsured, and you're going to look at reducing limits, which are going to ultimately reduce cost inside of your overall cyber liability portfolio of coverage that's there. So benchmarking goes both ways. It shows if you're overinsured, it shows if you're underinsured, but you're going to be able to get a tangible report to take away from that and really show where you should be relative to your industry. And that gives those, owners and CFOs who make the purchasing decisions, it gives them the ability to say if they're ever sued and a lawsuit ever comes from them, they didn't just make a recommendation based upon, or a buying recommendation based upon what their broker told them. They were given quality data and analytics that show them what their peers are purchasing inside of the industry, and then aligning it with their company. So if they ever are sued and have to sit in a deposition and are asked the question, where did you come up with this limit of liability and on this? Well, they can confidently answer that with hard data that is recent and shows what their industry and peers are doing inside of that industry in order to put themselves in a position of confidence during a very difficult and uncomfortable setting, such as a deposition from there.
Well, we've all received those letters in the mail of, our identity has been possibly stolen through XYZ company. You get credit reporting for the year, just go through these steps. What people don't realize is all that costs money. So every notification you have to send out when you've been hacked all costs money. And that's one of the protections that these things do. So I'm sure you do a great job going through these different losses and what could potentially be hanging out there for a customer that, may not have given it a second thought, but saw a news report about, maybe one of their peers got hacked and cost them $1 million. Well,
yeah, good
there's
point.
Protection for that.
Yeah, absolutely. And you hit on a notification expense standpoint there. How are notification expenses accounted for inside of a policy? Because notification expenses are now at the tune of about $175 per record in 2025. So if you suffer a breach that's of any significance that's there, and every state law is different and federal regulations are different. So if you end up having to notify, as you referenced, a lot of us have received these in the mail, especially in the wake of the Change Healthcare attack last year and the CrowdStrike outage earlier this year, and Blue Shield of California was just hit with 4.5 million patients' records were just compromised, and I believe it was in April, and another group out east was by Yale, was like another 5.5 million records compromised. Well, I mean, look, 5.5 million records at $175 dollars a record, you're not going to insure $965 million in coverage. It's not going to happen. However, if we break it down into a smaller chunk that's there, and we look at notification expenses alone on a policy, right? So if you're picking up $1 million or $2 million or $5 million limit of coverage, a very solid recommendation: put notification expenses on their own limit of liability, meaning on their own tower of coverage. Because if you do have a data breach that exposes thousands or tens of thousands of records, and you do have to go through the exercise of notifying those individuals and paying for credit monitoring, et cetera, from there, notification expenses can easily wipe out $1 million or $2 million limit of liability. However, if you have it on its own separate limit of liability, those costs will accrue specifically to that limit alone and leaves room for the remaining policy line items in the event that you're sued, in the event that you have regulators coming after you, in the event that you have another type of attack that comes your way or are held for a ransomware attack. The rest of the policy is preserved for other areas that are there, and notification expenses will accrue toward their own separate limit of liability. But you have to ask for it. Don't expect your policy to automatically include it. Having that done can help a company from having to self-insure or be uninsured for the rest of a loss following a breach like that as well. So it's a pretty solid recommendation for companies to pursue, especially in the wake of a softening market where we're seeing premium reductions.
Well, excellent, Brian. Thanks for the knowledge there. I'll be sure to pass some of my customers on to you.
Well, as always, appreciate the time, and hopefully we'll be able to connect again here in the near future.
Thanks, Brian.